and then you send a packet of information to the IRS, and you get permission to not be taxed for a certain type of your income.
The financial and tax system. Ladies and gentlemen, please welcome Tasha Preisner.
My name is Tasha Preisner, as you said. Yes, I'm managing partner, and I specialize in taxes. I also do accounting, but I actually prefer taxes. I think they're more fun, and I enjoy the IRS, oddly enough. I feel a little bit like Alice in Wonderland there. Nothing ever makes sense, but we just kind of roll with it every year. Oh, now it's saying connected. Let's see if yours works better than mine. Excellent. Perfect. Thank you. So my husband made this slideshow for me, so hopefully there's not any weird surprises. I am an enrolled agent. A lot of people don't know what that is. Most people know what a CPA is. A CPA is a certified public accountant. They get their certification through the state. An enrolled agent, or an EA, gets their certification through testing with the IRS. My recertification every year, my CE credits actually have to be all IRS related, whereas a CPA certification is usually IRS and accounting related. But yes, I've been working over 20 years with nonprofits as well. I started at a small nonprofit high school. In 2010, I started my own practice. And then in 2023, it's been about a year, I met a person and we decided to develop a firm, and here we are a year later. The firm has been rapidly growing. We have a tax line of business. We have a capital funding line of business. We have an analytics, an accounting, and an auditing line of business, all of which are managed by people who are massively credentialed in their fields. For instance, our analytics side of the business, if you've ever heard of Alteryx, I don't blame you if you haven't heard it. It's one of the top programs for doing data analytics. He's an ace, and there's only about 10 to 20 aces in the world. And he's doing data analytics for companies like Amazon as some of our clients. We're actually reaching out to the IRS to do some of their data analytics as well. So it's been a wild ride. I forgot how hard it was to open a business. It's like having a new baby all over again, but we've enjoyed it. So our goals for today is going over the 990 EZ form. There are many types of 990s. Specifically, there are the ones that we call the postcard. It's the PF form. It's for companies that have less than 50,000. We have some handouts that are going to be handed out to you. It's going to have a 990 EZ form already filled out that came from our company. Actually, it was from our company. I just changed up all the pertinence so you don't know who our client is. And it's going to have on the other side a set of financial statements that's going to correspond with the EZ form. And then the evaluation, my husband says, to successfully pass this class, you must give the presenter praise and accolades, maybe some chocolate. He knows how to keep me in a good mood. So we're going to start off with the easy part of the 990 form. Your information that you should already know, which would be your name, your address, your EIN, your phone number. If you don't have an EIN, this is going to be a significant problem. You're going to have to know your accounting method. There is a cash method and there's an accrual method. And the cash method basically is saying, I am tracking my income and expenses at the point where the money enters my bank account or exits my bank account. The accrual method is I am tracking my income and expenses based on when they incurred. So your income would be when the pledge is made to you as a nonprofit, or an invoice as not a nonprofit, and your expenses would be tracked at the moment that you enter a bill into your accounting system, not when the bill is paid. When the bill is paid, that would be the cash system. Most of the small groups start off as cash accounting and at some point move into accrual accounting when they get large enough. You're going to want to put on there what type of organization you are. Most of which are going to be corporations. The usual structure for setting up a nonprofit is you first become a corporation, and then you send a packet of information to the IRS, and you get permission to not be taxed for a certain type of your income. But by default, you're a corporation. That's not the only way to go about it. You could be a trust. You could also be considered an association and go the same route. So in this case, we're doing the EZ form because the EZ form is kind of the middle of the road for nonprofits that are not tiny. Tiny would be the less than 50,000. The timer is going off. There we go. The EZ form is for 50,000 to 200,000, which is going to be where most small nonprofits land. The full form we can never get through in 45 minutes, and so that one is for anything over 200,000 and is a very, very complex form. And you'll see that this in and of itself is a complex form, and if you take this and multiply it by a much larger number, you're going to get way more complexity. It takes my tax team, who are very knowledgeable with EZ or 990s, full forms, probably between 10 to 12 hours of time to compile a full form. So it's pretty intense. There we go. So we're going to talk about income. There is a lot more income that you can make than just contributions. Your top one is going to be contributions. And as you can see, this one is $143,000, falls comfortably in the 990 EZ. On your profit and loss and balance sheet, actually it's going to be called the statement of activity. There's a special name for these when you're a nonprofit. The total contributed income in this case is actually $143,821. I do not know why $5 went on to the services section, but that was probably a little accounting mistake. We just lumped that into the contributions and said $143,827. You'll find that the numbers aren't exact. We have to round, and so we drop off, of course, the cents, and as long as we're within $5 to $10 of what the profit and loss and balance sheet says, that's standard for being within range when you start rounding. So the different types of income. This is going to get really boring. I am so sorry. I'm going to try to make some interesting spots in here, but this is going to get boring. Contributions, you know what that is. Somebody walks in, hands you a donation, contribution, you give them a donation receipt, fairly straightforward. Program service revenue, including government fees and contracts. So this could be a fire department that is getting money from the county to run the department. This could also be an organization similar to something like Meals on Wheels, where they're getting money from the state and other government agencies. That's going to be your Section 2. What we're going to find out later on is that not all of these are necessarily tax-free to you. We're going to run into a special circumstance that we call UBIT, or unrelated business income. And there are things that could cause you to pay taxes as a nonprofit, and Section 2 is one of them. Membership dues and assessments. This would be like your American Legion, where you have people who just want to be part of your organization and they give you membership or dues for that. Your fourth investment income, most commonly, is going to be investment income from your savings accounts. Gross amount from sales of assets other than inventory. This would be if you sell a trailer, a car, something like that. And you'll notice underneath them has the cost or cost basis, we call it, of the thing you're selling, in which case that will be subtracted out from your sale, and your 5C is going to be what's left over. So if you sell a vehicle for $10,000, but the fair market value of that vehicle when it was donated to you was $5,000, because inflation, you held it long enough and now it's worth $10,000, that would only give you $5,000 to put on 5C. 6A is a big one that could end up giving you UBIT. This is gaming income, and this is very common when you do raffles. And there are lots of rules around raffles. The IRS is fairly loose. Most of their information around raffles is that it's mostly taxable, even if you're a nonprofit. But the states have so many different rules. You need to know your rules in your state. Like, for instance, in Texas, you either have to have a special permit or you have to do less than 4 raffles per year. In other states, they don't care. Do as many raffles as you want. Don't worry about the permits. And every state is different. Some states are just harsher than others on it. But that 6A will cause you to do another 990 called a 990T, and that makes you end up owing taxes usually on the 990T. But you don't have to pay taxes on the gross amount. The expenses that you have that goes against that gaming activity and raffle ends up being a deduction to that. So if you make, say, $10,000 on a raffle, but you spent $10,000, it evens out and you end up with 0 income. Then you have gross income from fundraising events. This would be events you do where people aren't necessarily giving you donations. They may give you money for other things in the events. I'm not really thinking of any off the top of my head. Maybe you're selling t-shirts at the events, but that would go under 6B. And then 6C, you subtract out the expenses that you had from the gaming and the fundraising events, and 6D is the net that you're left with. 7A is one that could easily end up causing you to do a 990T form for UBIT. This is sale of inventory. Now, not all inventory ends up being taxable to you, but some is. So when we think of things that are taxable to you, it is going to be different for every organization. It is dependent upon what the IRS gave you permission to have as tax-free income. And that comes down to that beginning paperwork that you filed with the IRS. Now, that may be different from organization to organization because all of you may have asked for different permissions from the IRS. Some people, when they're creating that original packet, they make a nice little one-line form, and so your scope of what you get to do tax-free is very small. We often suggest that if you're going to do the nonprofit form to make a new nonprofit, what you're asking for tax-free should be as long as possible. Let your imagination run wild, because if you stop asking, they stop saying yes, you could end up owing taxes on stuff. So the more you can ask for from the IRS to be non-taxable, the better off you'll be. And this is where it's really good to get an attorney involved when you're creating this form, especially an attorney who's used to this, because they're going to guide you to saying, okay, what about if you're selling t-shirts? What if you're going to get YouTube income going on? Do you want that to be tax-free? And the answer is always, of course, we want it all to be tax-free. Put it in this document here. But that one can end up, so inventory oftentimes, let's say you are a school and you are selling books that are related to your organization and it's inventory, that could be tax-free inventory. If you are a horse rescue and you open up a car dealership, that is probably not tax-free income. that's probably going to be unrelated to what you asked for, and you're probably going to need to pay taxes on that. Now, a lot of people fall into the trap of, but all the money goes to be spent on the horses. The IRS doesn't care what you spend the money on. You're not asking for them on what you spend the money on. You're asking for them on the nature of the income coming in. That's irrelevant to them if you spend the car dealership money on the horses. So that one, you just got to keep in mind, could end up causing you to have taxable income. And that is, of course, what you sold the inventory for minus what you bought the inventory for, and then the net amount there is what you could get taxed on. And then any other revenue that may not have landed in the upper ones, then we'll go on 8, your total revenue on line 9. So that kind of goes down what your revenue is going to be for your organization. This will play into your state forms later on when I get to them. This could cause you to have different forms to be filled out depending on what state you're in. Next is expenses. And this is where people care what you spend your money on. Now, if you want to have tax-free expenses, that's where you have to go to your state and get that sales tax permit. That's fairly easy. Most states have it, and definitely do that if you haven't done so yet. So line 10 is going to be your grants. This is grants you pay out to other people. Your 11 is going to be your benefits paid to or for members. The members here are defined as your board members or your officers. It is not illegal to give money to your board members or officers, but it has to be disclosed. And this is any money. If they show up and they do janitorial work for you and you give them $20 as a thank you gift, it has to be disclosed. If you sell them a t-shirt and they buy one from you, it has to be disclosed. Number 12, salaries. This is going to be your W-2 employees. 13 is going to be your 1099 contractors. Your 14, occupancy, rent, utilities, and maintenance is anything related to the building and the location that you are at. 15, pretty self-explanatory, printing, publications, postage, shipping. And then 16 is your other expenses, and that's going to be, as you see on this list, most of the expenses land on other, especially as your horse rescues and like your vet expenses, your feeding, a lot of your stuff's going to end up as being other. In which case, Schedule O, that's related there. You're going to see a lot of stuff going to Schedule O. It's everything that needs to be itemized but doesn't have space to be itemized here. We'll have a Schedule O with basically all the names of your other expenses and what they were. Then your 18 through 21 is going to be your statements of financial position, otherwise known as a balance sheet. But in the nonprofit world, we use special terms. And if you look at your balance sheet, what they're asking for here on lines 19 through 21, they're specifically asking for this equity amount. And if you look at the balance sheet, it is broken down into kind of 3 sections. Assets are things that you own. Liabilities would be things that you owe to other people. And equity is what's left over, or also considered what your net worth is. So in this case, what the net worth is for the ending amount is the $8,854 that you will see on 21. I didn't do the beginning balance sheet for 2022, so we can just take it by faith that we knew it was $9,256. Okay, moving along. Page 2. There's your balance sheets, your part 3. This, what they want you to do, also they want it on Schedule O. They want you to take your top 3 programs that you have, and they want you to make a concise statement about it, and then get an idea of what your expenses are based off those top 3 programs. And you can see how it was written out here. And most people, instead of nickel and diming it, saying, well, this one went to this one and this one went to this one, that's really the more accurate way. There is a possibility you can easily just kind of get a percentage of, say, okay, this one's going to be 50% of our expenses went here and 30% went here. And that's going to make it a lot easier for you. So your total program expenses of the 114,078, in this case on your statement of activity, is going to be your total expenditures plus your total other expenditures. Comes to the 114. On page 1, let's see, we missed our line 18. That is your net income. That's going to be all of your income minus all the money going out is what you have left over. Okay, line 1. Part 4. This is on your board members. You do have to list out your board members, your officers, your trustees, and your key employees. And you have to put down what they are, who they are, and the average amount of time that they worked per week. As you can see, Beverly Franklin, which my husband chose that name because for some reason he wanted to use the signature of Benjamin Franklin, so he figured Beverly Franklin should work on that. Apparently she works 120 hours, and that's someone who works 24 hours a day, 5 days a week. So obviously they live around there and they just spend their whole life working on the horse rescue. Elon Moose only does 20 hours a week. That's nice of Elon. We also have Bill Gatewood. He doesn't do a whole lot. But you'll see on lines C, column C, D, and E, this is where monies have gone from the organization to the officers, the trustees, the directors. Now, this is going to show their W-2s, their 1099s, if they received any health benefits they got, and anything else that they received in compensation on E. It is not illegal to give them money. It has to be disclosed. And this could be anything that you pay them. It does need to be disclosed. Part 5. This is where I had to write off a bunch of chicken scratch on here, and I'm really hoping I can read my own handwriting. I'm pretty sure I could, but we'll see. So this is a page of yes or no questions. That is actually very important for you to know. On a full 990, there's like 3 to 5 pages of these. Luckily on this one, there's only one because we would never get through it in 45 minutes. But let's hit up some of the most important ones. Lots of them will be zero, or lots of them will be no. But on 35A is an important one to look at, and 35B and 35C. So basically, this is asking, did you have any UBIT income or unrelated business activity? In which case, you need to say yes or no. And if you say yes, then you need to fill out another form to go with this one called a 990T that you might end up paying taxes on. And you can also see here which ones they believe could possibly be hiding UBIT in it. And if you notice on line 35A, it specifically refers to lines 2, which if you go back to the first page, was program services. 6A, which was gross income from gaming, and 7A, which was your sales of inventory. Those are the most common places for UBIT to hang out. There could be other places, and it says among others, but those are just the most common places. Let's see, these are a lot pretty self-explanatory. Were there any significant changes made to your organization? Did you engage in any significant activity that was not previously reported to the IRS? Did the organization undergo a liquidation or dissolution, termination? Did you close your organization? Did the organization borrow from or make any loans to any officers, directors, or trustees, or key employees? And did you pay it back, or are they still outstanding at the end of the year? There's a lot of stuff in here that gets really technical. If you see 40A, that talks about section 4911, that's going to be accidental tax paid. 4912, disqualified lobbying expenses. 4955, public office candidates that you may be giving money to, or whether or not you're trying to have it go against them or for them. There's all these things that are not illegal but do need to be disclosed. And every time you see the word disqualified, that means that the IRS will have a list to go along with that. You'll see on 40E, another one, were there any transactions that were considered a prohibited tax shelter transaction? Now, there are a number of things that the IRS defend or calls that, and you'll have to go to the IRS website. I can also show you to point it out. It changes every year, but there is a list of what they're calling prohibited tax shelter transactions, and these are things that people use to try to get out of paying taxes. And there's very legal ways to try to get out of paying taxes, and there are illegal ways to try to get out of paying taxes, and they list those out. Some people who open 990s and open nonprofits are not doing it out of the kindness of their heart. They're doing it because they're very wealthy people and they're really tired of paying taxes, and they think that if they open a nonprofit, they can still somehow pay themselves a bunch of money without actually paying taxes. And it's usually in that list that ends up being the prohibited tax shelter transactions. They're looking for people who are also trying to make money off of the organizations in ways that they shouldn't be. Here's an interesting one, 41. List states with a copy this return is filed. And this one says none, even though our fake horse shelter that we created was in Nevada. That is not true. Nevada does have some, but the original one that I ripped off came from Texas. And so Texas has none. But some states are very tricky. Anybody here from California by any chance? California has some of the worst 990 laws and filings that there are. And so you're very lucky if you're not in California. For instance, a little story that I ran into this year, they have 3 tax forms that has to be filed. One is a 199. That's basically what this form is in their version, goes to their office. We send it out to them at the same time we send off this form to the IRS. Then you have the S1-100 that is filed to the Secretary of State, in which case this thing is filed every 2 years, which is an incredibly cruel time period because nobody remembers if this was the year they filed it or not. And then they have one that is to the Attorney General's office, and the only thing I can figure is that the Attorney General's office in California is on fire right now because they are not functional. And this is the RRF-1 form. Now, I ran into this problem earlier. It was about spring of this year where we filed an RRF-1 form for 2 organizations. And one of the organizations was calling us panicking because California was showing them as being a disqualified organization, and they were about to lose all of their grant funding, hundreds of thousands of dollars. Now, on my end, it was showing that the form had got there. I had a successful confirmation come through on my end. I had no reason to know that it didn't get there. Apparently, the form didn't get there. It's supposed to go to the state of California, and the state of California's repository is supposed to forward it on to the Attorney General's office. And who knows what happened at that point, because they obviously didn't get it. At which point, the Attorney General's office put them into a disqualified kind of zone. And to be able to get out of this, they would no longer take e-filing. So I tried to e-file again, it got bounced back. I tried to fax it to them, it didn't get to them. This was like 5 days before the organization was to lose all of their funding. And they were panicked. I was panicked. It was just extreme panic everywhere. I call up the Attorney General's office and they said, ma'am, the only way to get this form to us is to print it off on paper with the $9.90 and a check and put it in the FedEx and send it to us. I said, oh boy. So we did that. We overnighted it to them. Within the next day, we called them up again and they said, ma'am, we're getting 1,000 of these in a day. I have no idea if yours came in or not. And this seems to indicate there's a serious problem going on if they're getting 1,000 of these in the mail per day. So then I started checking for my other California corporations. And yes, they were having the exact same problem. And so I notified them. Luckily, it wasn't enough time. They weren't panicked yet. And I said, here's what you need to do to fix it. And we got it sent in, and that's in the process of being fixed. And so this year, I just preemptively told my California companies, let's just go ahead and do a paper filing, even though I've e-filed it just in case, because this is a serious problem. This is such a large problem that just recently on Yahoo News, how many of you have heard of Prince Harry and Meghan Markle? They have an Archewell Foundation named after their child, Prince Archie. And they are also in the delinquent category because the state of California didn't receive their RRF1 form either. And so they were actually in Nigeria on a trip when they got the information, and their CPAs were like, we sent it in. I'm like, I get it. This is a problem. The Attorney General's office is on fire over there. Somebody needs to go fix them. But yes, and so states and the IRS have problems, and they're not necessarily your fault, and they're not our faults as tax people. They are just problems. I recently found out within the last year, the IRS has these same problems. Literally, all the tax software that is going to the IRS doesn't actually connect to the IRS. You have somebody in their office that's taking the information coming in and manually converting it every day into a format that the IRS computers can actually read. Now, if you've ever formatted information, you know there's data loss every time. And so this is why we are getting really stupid letters from the IRS every year saying, you didn't fill out this form, please fill out Section 5 of line 4, in which they have sent you the form, and you look at Section 5 of line 4, and there happens to be a number there, which is the correct number, and you have to send them back a letter saying, please look at this line 4. This number is actually there. And this has happened. I've gotten 4 or 5 letters from the IRS saying this, but this is because of this manual conversion. The IRS is still stuck in about 2002 right now. There are some forms that my colleague has to fill out with a typewriter. She literally has at times to go find the antique section of their office, pull out their antique typewriter, type the thing in, and mail it to them. I filled out a form recently that not only had to be filled out and paper sent in to them, but they told me which 2 fonts I was allowed to use and which size of fonts I was allowed to use. And I can tell you, neither of the fonts was Times New Roman or Arial. So this is just the nightmare stuff that we have to deal with, because what's happening is laws are getting created by politicians. These politicians have no idea about finances or taxes. But they are creating giant financial laws every single year and sending it to the IRS, in which the IRS people look at these badly written financial laws and then go, okay, let's try to make some sense out of this. And so that is when they start actually trying to put things together and, okay, we're going to make this think this says this, and we think this says this, and okay. And then they have stuff even from 1973. There's literally a tax treaty with the USSR from 1973 that cannot be ratified because all of the things that it takes to ratify it don't actually exist anymore, since the USSR does not exist anymore. And it's dealing with rubles, which is a currency that doesn't exist anymore. And yet, this is a law on the books that we still work with. I have actually still had to be creating tax planning using a 1973 tax treaty because the countries that are broken down, this one happened to be the country of Georgia, does exist. And so, yes, we're working with some very old laws that were created by people who have no clue what they're doing and in some situations can never be changed, probably for the course of history. And luckily, the IRS has this 10-year strategic plan in which they are planning on getting into this century. We're hoping. We don't know if they will or not, but we are desperately hoping that they will. So you'll see that in this case, we not only do the tax forms, but we do the organization's books. And so that is real information that the organization's books are in care of DeMar Consulting Group, and that is our information. Going down to section lines 44 is stuff we need to look at. Donor advised funds. They want to know, did any donors give you money saying this is what the money has to go to, and do you still have it at the end of the year? Sometimes you can give tax-deductible receipts for this money, and sometimes you can't. And what that depends on is before the donors gave you the money, did your board decide that this was an approved thing for donors to give advised funds for, or what we call restricted funds? If your board says these are the restricted funds we're raising money for, we are raising money for a new horse trailer, and so people give you money for a new horse trailer, you can give them a tax-deductible receipt for it. If your board does not say that they are raising money for a new horse trailer, and somebody randomly walks up to you and gives you money for a new horse trailer, you're technically not allowed to give them a tax-deductible receipt for. So that's donor advised funds. The idea being behind this that if it's donor advised, that in theory it's still controlled by the donor, and if it's controlled by the donor shouldn't be getting taxable benefit from it, unless it's approved by the board, in which case then the board is in control of it. So the idea is who's in control of the money. This is a fun one that I had to look up. 44C, I did not know this information before this morning. This actually forced me to learn new information. Did the organization receive any payments for indoor tanning services for the year?
Yes, all the time.
This is oddly specific, so oddly specific. I had to say, why? Why indoor tanning? They could have chosen anything. So back many years ago, there was something called the Affordable Care Act, if anybody remembers Obamacare, in which case had, just like the CARES Act in 2020, which was again another nightmare act that had a whole bunch of information in it, Affordable Care Act did too. And one of the ways that they wanted to pay for this information, or all of these, specifically the premium tax credits that they were giving out to a bunch of people, is to increase an excise tax on tanning services. So around that time period, if you were into indoor tanning, you saw your prices spike by 10%. This is why. And it still exists to this day. This has never been ratified. And so, yes, they still ask. And they did this for 2 reasons: to help pay for the premium tax credits and to be able to try to discourage people from getting so much skin cancer by using indoor tanning salons. But they found that it actually didn't do either. So 45A is on controlled groups. Now, controlled groups is probably not something that you're not into, which is very good because half of this form has to be filled out if you're in a controls group. If you're not, then you don't have to fill it out. Basically, if you have organizations that you either control via, you give them so much money that they wouldn't exist without the money you give them, or functionally you are in charge of their organization, that's a control group. We are definitely not going to make it through this whole thing, which I knew, and that's why I didn't even try doing the full form. Okay, so let's try to get to something else that might be important to you. So that's pretty much the end of the main form. The rest is going to be schedules.
There's no schedules in here.
Okay, it's going to be just other, yes, there's a Schedule A. The person who made this PowerPoint, there's a Schedule A. Okay, so here you do need to look at page 4. Schedule A it's right before Schedule A, Part 6. This is going to be all organizations that are 501c3s. Did you have any employees that made over $100,000? They need to be listed. Did you have any 1099 people who made more than $10,000? It needs to be listed by law. And that's going to be the people who created your tax form, and they need to put their names there. You're going to have a signer. They need to sign and date it. And you're right, you didn't put any Schedule A, and that's a little disturbing. So we're going to go to our last page here, Schedule A. This is going to be right after the names. So this is where you decide you have to choose one of these. What are you? Most likely you're a number 10. You could be another number, but most likely you're a number 10. If you're a number 12 through A through G, a whole bunch of information is going to have to be filled out. But if you're a number 10, you definitely have to fill out the next page. Wait, no, that's 5, 6, 7, 8 is the next page. Number 10 is going to be the next page over. You don't have copies? You didn't make copies of this? Okay, well, you may have to come look at mine if you have questions about this and take pictures of it then. Essentially, if you are a number 10, you do have to fill out how much money came from your public support and how much was your total support, and it means that you're a publicly funded company. And then everything else is blank because you're not a number 12. Anyways, I look forward to chatting with you. There is a bunch of information rattling around in my brain that I will try to impart to you for any questions you ask.
Board of Director contributions count as public support?
Yes. Yes. There should be a question answer coming up soon, so I will leave Tawny to it.
All right. I tried to listen and I barely understood any of it. I don't know if this is working. So one thing I did want to point out is in your schedule there is information, a website at the bottom. Last year, one of the organizations that came through the mentoring was really struggling with their taxes, and we did tell them about this group. And they've been very, very happy with them. So one very important thing to think about is we have to have, as organizations, we have to have this IRS stuff done properly, or you'll get shut down. So, getting a group like them to really do your finances it's just a smart thing to do. And they'll be here through the whole event, so you can talk with them, pick their brains. Definitely take this part seriously. I know it doesn't seem like when we go into rescue, it doesn't seem like something that's very relevant to us, but it is very, very important. So definitely, you've got a world of wealth on the tax world here, so definitely talk to them about it.